from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, from largest shareholder to board member, how Elon Musk's sudden moves at Twitter could raise alarm at the SEC. We will have all the details. Plus, Uber adds flights, trains, even hotels to a pilot program in its super app push. We'll tell you how CEO Dara Khosrowshahi wants to expand beyond rides and food delivery. And Bitcoin 2022 is now underway in Miami. We will bring you the latest from the crypto conference and catch up with some of the attendees later this hour. All of that in a moment, but first let's get a look at the markets with Bloomberg's Katie Greifeld. And Katie, it is day 2 now of Musk's Twitter board membership. And after a huge spike in shares in the last 2 days, how are investors feeling about it today?
Emily, it is definitely the story of the week. So if you take a look at Twitter over the past 3 days, you're looking at the rally that Elon Musk built. Twitter shares up about 29%, almost 30%. They did decline a little bit today, but really held off in what was a broad-based sell-off. If you look at the big board, you can see that the yield curve held on to its steepening trend, and you have those long bonds continuing to sell off. If you look at oil prices, for example, you saw crude oil dip below $100 per barrel, crude down 5.6% this session. Meanwhile, you did see volatility pick up, judging by the NASDAQ 100 volatility index, but it was the chip stocks that were your big underperformer today. You're looking at the Philadelphia Semiconductor Index down 2.3%. And let's stick with the chips because this is part of a broader sell-off that we've been watching all year. You're taking a look at NVIDIA, AMD, Qualcomm here, all down double digits and then some so far in 2022. And if you look at the index level, the Philadelphia Semiconductor Index down 19% year to date. So definitely a sector to watch, Emily.
All right, Katie Greifeld, thank you for that roundup. I want to come back to this week's big story. The big story in tech, of course, Elon Musk joining the board of Twitter 24 hours after his 9.2% stake in the company was disclosed. What does this mean for the platform's future? I want to dig deeper into this with Daphne Keller, director of the program on platform regulation at the Stanford Cyber Policy Center. Daphne, great to have you back with us. So it's been a whirlwind 72 hours. In just the last 24 hours, Musk has now filed to become an active investor in Twitter, not just a passive investor, meaning that he will advocate for changes. What influence do you think Musk will have on the platform? How will Twitter change as a result of his board membership?
Well, I don't think anyone knows. And, you know, there are a lot of predictions people could make. But one thing that's particularly interesting is the possibility that he will join Jack Dorsey and current CEO Agarwal in promoting decentralized models, in, you know, promoting ways to allow third parties to come in and offer different content moderation systems on top of Twitter, or different content ranking systems, which would be a really important shift if it happened.
So Twitter's Blue Sky project, which is this push for an open, decentralized standard for social media that is funded by Twitter, you know, is this something that you think Musk could or would take on? And you know, what specifically would you be looking to change?
Well, so the upside of the project is that it would let Twitter users pick the speech rules they want to live under. You know, they could sign up for a Disney flavor or a church affiliated or Black Lives Matter affiliated flavor of the ranking or of the rules on harassment or violence or nudity. So all of these things would allow Twitter to step back from being the one gatekeeper that decides the speech rules and bring in lots of different options for users. So you can see Musk, who has talked about, you know, open sourcing the algorithms and is broadly interested in decentralization, liking that. On the other hand, you can see him liking consolidated control and preferring a world where Twitter does set the rules. So I think, you know, it's a wait and see situation for sure.
Could this have repercussions for other social platforms like Facebook?
Sure. In a way, you can see Project Blue Sky, which is about decentralizing rules, bringing in more decision makers and more options for users, as like a counterpart of Facebook's oversight board. in both cases, it's platforms saying we're uneasy being the deciders, especially on issues that divide the public so much that somebody's going to be angry no matter what we do. And so we would like to hand that role to someone else. Facebook's answer was keep it extremely centralized, fund it with Facebook money, and build the oversight board to decide hard cases. And Twitter's answer with Blue Sky potentially is to say, let's decentralize this. Let's put lots of different people in charge and sort of devolve control to the users so they can choose what they want and move the costs, incidentally, of all this content moderation out onto other competitors. So it's not sitting with Twitter, where it's very expensive and very difficult as part of their business right now.
Now, the biggest, perhaps most existential question is what could this mean for free speech on Twitter and in general? Take a listen to Professor Jennifer Greigel from Syracuse University when I asked her how this could change how Twitter handles free speech.
This really isn't about free speech. If anything, Twitter has just become a little bit more about Elon's speech. He just bought a large portion of this company and gets to kind of steer what happens there now. If anything, he's figured out that this is a powerful platform. Maybe he took some notes from Mark Zuckerberg and others that you need to have some influence over a platform.
Daphne, do you think this is more about Elon's speech? And how could this influence future moderation efforts at Twitter?
Well, it would be more about Elon's speech if we stay in the world of Twitter being a single centralized point of control over the rules that are imposed on users and their speech. So if we don't go in this decentralized direction that we've been talking about and that Jack Dorsey has been talking about for a few years, and instead there's just one decider in the middle, then obviously Elon Musk's role there is really important. But I don't think we should foresee a world where Twitter becomes, a free speech mosh pit free-for-all, because they're not going to make money that way. If you get onto Twitter and you can't help seeing a bunch of racist comments or bullying or spam or, all of these things that users don't like and that advertisers don't like, that is not a way to retain users or to be profitable. So I don't think we should imagine a world where it's anything goes on Twitter. It's, at most a world where Twitter still imposes its own rules, but they're more influenced by Elon Musk, but possibly this really interesting other direction where Twitter steps back and gives users a choice. You can choose to live under Twitter's rules or you can choose to live under some other rules.
Which brings me to the question of Donald Trump. And could this open the door to former President Trump coming back to Twitter after being permanently banned? I've asked Ned Siegel, the CFO, this question several times over the last year. Is there a path for Trump to come back? Take a listen to what he's had to say.
Once somebody is removed from Twitter, there isn't a path for them to come back. And that's true for public officials. It's true for anybody else who uses the service as well.
Now, Trump, in a lawsuit against Twitter back in January, said Twitter has increasingly engaged in impermissible censorship. The immediacy of its threat to users and potentially every citizen's right to free speech cannot be overstated. Twitter's censorship results in a chilling effect on our nation's pressing political, medical, social, and cultural discussions. Does former President Trump have a point? And do you see Elon Musk coming back? Could they reopen this question of whether he should be on the platform?
Well, former President Trump does not have a legal point. As a legal argument, this lawsuit is nonsense because private platforms don't owe you First Amendment protection the way that the government does. And courts have said this over and over again in cases very much like this Trump lawsuit. But as a matter of public policy and things that we care about, is it a problem that there are a small handful of giant companies that really have a chokehold over what speech and information we can share and see? Yes, of course people are worried about that. And so, I can imagine a future where Twitter's version of its content moderation continues to have former President Trump banned for life, but there are alternatives, a lens on Twitter offered by some competitor that does allow him to come back, and then users can choose which of those universes they want to live in.
Interesting. So you think that Twitter could find a middle ground here when it comes to President Trump?
Well, so imagine, their users can choose from 50 different flavors of competing content moderation services built on top of Twitter. One version of that is an entirely federated system, meaning there is no centralized control, kind of like Mastodon now. And so, in that version, anyone can build a system where President Trump does come back, and it's just a question of whether users want to sign up for that. I think what's more plausible as a future development with Project Blue Sky is a sort of hub and spoke model where Twitter does take some things down at the center, like things that are illegal or honoring DMCA notices. And then what's left goes out to the competing offerers of content moderation services, and they can decide among those things that are left. So more like how Reddit does some centralized content moderation, but then most of the decisions are made by different subreddits, applying their own different policies. So Twitter could choose to say, we're going to take down all the illegal stuff at the center so no one can see it. And also some things violate our own policies so badly that we're also going to keep that down permanently for all of the competing flavors of content moderation. But I don't think that would be a wise step.
31, 51 flavors. We'll see if Twitter moves in that direction. Daphne Keller, Director of the Program and Platform Regulation at the Stanford Cyber Policy Center. Thank you. Well, Elon Musk's swift ascent from Twitter shareholder to board member could catch the eye of the SEC. This at a time when the commission is demanding more transparency from big investors and ratcheting up fines for breaking rules. Here to talk about that and more, Bloomberg's Matt Robinson, who covers the SEC for us. So Matt, is there any indication that the SEC is looking at this yet?
Not yet, but the SEC is looking at Elon Musk and his brother for insider trading or potential insider trading issues about a share sale last fall. So, as we know, the SEC and Elon Musk go back, quite a few years now, from 2018 with his infamous funding secured tweet and the subsequent penalty and settlement, which limits his ability to talk about his company on the platform.
Now, Elon Musk initially filed to be a passive investor. We know now in the last 24 hours he's changed that to become an active investor. We also know he started buying shares starting back in January. The CEO of Twitter, Parag Agrawal, said that they had actually been talking for weeks. Now, perhaps it could actually be months. What's significant about that to you when it comes to the interest of the SEC?
So those are the two different filings that big investors have to disclose. We have a 13G, which is someone who's taking a passive stake, someone who doesn't have any interest in seeking any sort of business plans or changes, and then the 13D, which is what he filed yesterday. So there is room for an investor to go from a 13G, which is the passive side, to an activist side. So so by updating that, that's fine. The issue that Elon Musk may find himself into is that he as soon as you hit 5%, you have to disclose within 10 calendar days, and it looks like he may have missed that window. So that is sort of a technical violation that he could see some issues, but the SEC is they don't really bring those cases unless it's kind of repeated failures.
How fast could we see the SEC move on this?
Oh, well,
it's obviously just happened. I mean, if they haven't, started an investigation in a couple of weeks, is it smooth sailing?
It certainly can be quick. I mean, if you're back in 2018, if I remember correctly, it was like early August that he brought the funding secured, and at the end of September, the SEC sued Elon Musk. So, I mean, if there's, the facts and certainly the motivation there from the SEC, if they feel like this is an important case to bring, that this is going to show to Musk and to other investors that you have to take these sorts of disclosure rules seriously and promptly.
All right, Bloomberg's Matt Robinson, who covers the SEC for us. Thank you. Coming up, Dara Khosrowshahi is pushing Uber closer to becoming the go-to travel app, adding long-distance travel like planes, trains, hotels. Will it work? Could Uber be the next super app? We will explore next. This is Bloomberg. Let's get to Uber's continued push to become a super app. The ride-hailing company planning to launch a pilot project in the UK that'll integrate offers from travel partners. That means customers will soon be able to book long-distance travel on planes, trains, buses, even hotels. Bloomberg's Jackie Davalos has more. So how exactly will this work, Jackie, from a customer's perspective?
It's going to be a one-stop shop for transportation. Now, while we were able to get a cab to the airport, now when you're at the airport, you can hail or book the next train ride or your bus from whatever city you're going to. It's really going to become a much more comprehensive travel hub. Now, for Uber, this is the next step in their super app strategy. This is not something that is completely new. They've telegraphed this even, back in 2018. Dara Khosrowshahi had this big idea that it could become a super app. And when you think about it, it's not a concept that is very well known to Westerners in particular, but in Asia, it's huge. Uber has a stake in Grab, which is one of the biggest players and examples of a super app where you can access payments, you can hail a ride, you can get food delivery all in one. So this is a major step, really jump-starting those efforts for Uber.
Now, you and I just spent time with Dara Khosrowshahi at Shop Talk a couple of weeks ago, and he talked about this vision to deliver the future of retail, not just food. Take a listen to what he had to say when I asked specifically about these super app ambitions.
So what we're doing essentially is building the largest local commerce and transportation platform on earth. The users, riders, consumers get the ease of essentially being able to go and go anywhere, get anything, same ID, same payments, etc. We know the locations that you like to go or restaurants that you love.
Jackie, it all sounds good, but how will this or could this help Uber's bottom line, or could it hurt?
Well, when you think about this particular long distance travel move, the way it's going to be done is by using online travel aggregators. So think of an Expedia or a Booking. They're the ones that are actually booking the ticket, but Uber is taking a cut out of that sale. It's a really high margin type of strategy where, they're not the ones having to get the plane or the train, the actual hardware. What they're doing is just facilitating this sale for customers that are already very engaged on their app. When you think about the different ways that Uber can tap people's lives, you can book a restaurant, take a ride to the restaurant, pay for the meal. The opportunity for growth is very, very significant.
So what does this mean for competition, especially given this is launching in the UK? Obviously, there are big travel competitors like Expedia, Bookings. What does this mean for the rest of the industry?
For some of its direct competitors, let's take, rideshare, Lyft, for example. If this kind of long-distance rollout were to reach North America, it would be a huge blow for Lyft, who doesn't have the kind of cushion that Uber has with its food delivery business. And also, when you think about some of the marketplaces that are also vying to keep their customers on their apps longer, whether it's DoorDash or Instacart, this is going to be a significant challenge, especially if Uber's making it easy to do all of the things in the app, whether it's, a ride or a meal, convenience items, retail. So I think it's rapid delivery. It's going to really, up the ante for marketplaces and rideshare rivals to find ways to keep customers on the app.
All right, we'll be watching how this plays out. Bloomberg's Jackie Davalos. Thank you. Coming up, we will meet the newest star of Twitch and talk about why this pink-haired anime avatar is part of a big rise in VTubers. That's next. This is Bloomberg. She is one of the most popular stars on Twitch with more than 1 million followers. Meet Iron Mouse. She not only plays some of the most popular video games on the streaming site, but also sings karaoke and cracks jokes to her many followers. For more on the rise of Iron Mouse and other VTubers, I'm joined by Bloomberg's Cecilia D'Anastasio, who covers the gaming industry for us. So who is Iron Mouse and why has she gotten so popular?
Iron Mouse is an anonymous woman, a Puerto Rican woman, who became very popular on Twitch and on YouTube for live streaming herself as a virtual anime character. Through motion capture technology, Iron Mouse kind of moves in front of a camera, and that gets fed through animation software. And that is what you see on screen. You see a VTuber or virtual YouTuber.
So what do we know about the woman behind this character?
We don't know anything about the woman behind this character, but she keeps herself anonymous just to protect for her own safety.
So talk to us about the rise of VTubers and who else is falling into the popular category.
There are 17,000 VTubers right now. Iron Mouse broke records recently, becoming the most subscribed to woman on Twitch and the most popular VTuber on Twitch last month. But VTubing has become a sensation over the last couple of years, with an over 467% increase between 2020 and 2021. And fans love it. They love the feeling of interacting live with an anime character, or a person kind of presenting themselves as an anime character.
You know, obviously we've talked a lot about the rise of YouTubers and the kind of money they can make. I mean, is there a lot of money to be made here? Are there careers to be made here?
For a select few, there is money to be made and there are careers to be had. There are some larger brands who have invested in VTubers, particularly in Japanese VTubers. Companies like Sega have been involved in sort of helping sponsor companies. The first VTuber, Kizuna AI, has done enormous deals with even like the Japanese tourism agency. But generally speaking, it is a competitive field right now, and only the top people with the best technology are going to succeed on the level that Iron Mouse has.
All right, Cecilia D'Anastasio, fascinating. We'll have to try to learn more details about Iron Mouse. Thank you for sharing that. Coming up, they just raised nearly $2 billion, looking to bet big on tech. My exclusive conversation with Lead Edge Capital's Mitchell Green up next. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. What goes up must come down, right? My next guest thinks tech valuations have gotten ahead of themselves and has launched a new fund to put new money to work in this rapidly changing macro environment. Joining me now for more, founding partner of Lead Edge Capital, Mitchell Green. Mitch, great to have you back with us. So how do you think valuations are hanging right now? Are they too high? And what's next?
Yeah, thanks, Emily. Thanks so much for having me on. Are we talking public or private company valuations?
Both.
Both? So look, I mean, anybody watching the markets has obviously seen that, especially in the software internet world, public valuations have come down, fairly dramatically. You wouldn't know it in the indices, given just how much of the indices is weighted towards the large cap companies like Apple and Microsoft and Facebook and Google and stuff like that. But underneath those, companies like Snowflake or Toast or, Okta or, these companies have come down hugely dramatically. And, public companies tend to, lead private company valuations. And I think you will start to see, and we're starting to see private company valuations decline. You'd had a lot of crossover hedge funds that had been entered the space over the last 5 years, and we're looking at some large deals right now that 6 months ago it would have been kind of swarmed. These are $50-60 million revenue companies that would have been swarmed by crossover public investors, and I think in this deal there's like one looking at it. So it should be like a good time to invest. Depressed valuations and less competition should be a good time to deploy money.
Right. So how do you plan to put this new $1.95 billion to work?
Yeah. So same way we have been for many, many years. We deployed our last fund, a $950 million fund, in like 15 months. And so, we want this fund to take, 2.5 to 3 years, 2.5 years, 3 years to invest. And so continuing to do what we do, we're primarily Western European, North American investors. We've done some stuff in Asia over the years, companies like Ant or ByteDance or Alibaba Group we were early investors in, but primarily US and Western European and Israeli-based software and internet companies and fintech companies.
So, when you look at valuations, are you changing your own bar in terms of what is reasonable? And do you think more broadly we're just going to see a lot of air get let out of the balloon?
Yeah, so look, since our biggest mistakes, to be clear, over the last 5 to 10 years was not predicting multiple expansion. Had we would have made our LPs billions of dollars more than we've made. We've done really well, but we would have made a lot more. And look, the way we make investments is we build 5-year models, and this is no different today than it was 5 years ago. And we slap a reasonable, earnings or revenue multiple on them and discount back. There were a bunch of deals getting done over the last 12, starting there were a bunch of deals that got done in 2021 that we could not figure out how people were underwriting these valuations because when we stuck in our exit multiples, which we thought were reasonable based on historical averages, we just couldn't get there at all. And it's just we kind of use a historical average multiple to exit stuff, and we'll continue to do that. And so I think what's interesting is that in Fund 5, we just raised Fund 6. We'd only done 1 or 2 deals in the Bay Area, and a lot of our deals were just in random other places around the world. Ann Arbor, Michigan was one of our biggest investments in Fund 5. We just thought you got better valuations there. It's not because we don't like stuff on the coast. I think in Fund 6, you will see us do more stuff on the coasts just because I think valuations are getting to be more reasonable.
Now, online payments company Fast just closed shop yesterday, saying they simply ran out of money. Are we going to see this happen more often?
I'm sure you will. Yes, I'm sure you will. We have this one criteria that is super important to us called capital efficiency. And it's like our version of return on equity. It's like the very dumb person in our views return on equity. Because it's not based in scientific fact. But what it is are your revenues today, are your recurring revenues today, or your annual recurring revenue, ARR, greater or equal to the amount of money you've burned since day one of the business? Now, maybe you've raised a bunch of money, but if it's sitting in the bank, don't blame the entrepreneur. So in other words, the world is littered with $30 million revenue companies growing fast that have burned $100 million to get there. But we want to find the companies that are $30 million of revenue that have burned $10 million to get there. Because those are companies that are just not going to fall off a cliff if times get tough. They also just if you can grow fast and not burn much money, you've got a good business. So it's just a simple a check that in every deal that we invest in, we rate it. Is it capital efficient or not? Now, not all the companies we've invested in are, but the vast majority are. It just keeps.
What are your thoughts? What are your thoughts on the crypto market? Where do you see hype and where do you see opportunity?
I think it's a giant bubble. But to be completely fair, we've looked at some of the stuff in crypto, more around the picks and shovels businesses, like a business called Chainalysis we looked at early. We're not investors. Benchmark was an early investor.
So where do you see the giant bubble?
I don't know if the right price for Bitcoin is 60,000, 70,000, 20,000, or 500. I just know this. When I have a lot of random friends who know nothing about investing telling me it's easy to make money in crypto, that smells bubble to me. I also, one of my buddies who's been a really early investor in crypto and made a lot of money on it, and somebody I guess I should have listened to, said he's convinced that every fraudster in the world is now in the crypto world. This stuff is real. And by the way, if you believe that crypto is the next internet, then you might see a drawdown of 90% or 80%. But this stuff is real. I just think a lot of this stuff is overhyped, and is not justified at all in fundamental investing. But I do think it's real. I do think it's here to stay. One really interesting thing about crypto is it's it's really volatile. So I was reading recently, when I saw that Tesla was enabling you at one point to be able to pay for Teslas in Bitcoin, I thought that was super cool. You could take you could take a currency and use it for an exchange of goods or services. The problem is and the reason they got rid of it and why I think you haven't seen Amazon and other big retailers start to accept it is these currencies are just too volatile. I think there's been something like 10 days where Bitcoin has moved 10% in a day. The biggest US dollar move ever, a US dollar euro move ever, has been 1.5%, and it's happened 5 times. So these things are just too volatile right now, but I do think they're real.
Yeah. All right. Interesting little monologue there. Mitchell Green, founding partner at Lead Edge Capital. Some strong opinions. We'll see how you put your money to work. Thank you. Meantime, billionaire crypto investor Michael Novogratz says that once the Fed takes a pause, Bitcoin could take off again. Or in his words, Bitcoin goes to the moon. Novogratz leads Galaxy Digital Holdings. At the Bitcoin 2022 conference in Miami, Novogratz reiterated a call that Bitcoin will eventually hit a price of $1 million. It was trading today at a little over 44,000. Coming up, Bitcoin 2022 now in full swing in Miami. We'll catch up on what's going on, talk to crypto security startup Ledger, also at the conference. More on that next. This is Bloomberg.
He really truly understands the value of cryptocurrency, whether it be Bitcoin or Dogecoin. He knows the value of open source networks. So what I think is going to be interesting is he going to bring these elements of the crypto world, these anti-censorship elements, the open source elements, and allow for a way for new people to come in and maybe import their own algorithm.
Time now for our crypto report. That was the Blockchain Association's Kristen Smith saying it's a good thing for Twitter that Elon Musk is now on board. This day 3 now of this developing story, and I want to dig into it all with our crypto contributor, Sonali Basak. Sonali, would love to hear how the crypto community is digesting Elon Musk joining the board of Twitter, given he's been such a loud figure in the crypto community. There's a huge crypto community on Twitter, and the future of Twitter could be more decentralized.
Yeah, it was interesting to hear Kristen Smith talk about it from the decentralized social network standpoint, because you could also, Emily, think about it from a commerce standpoint. Remember, Twitter has already started to integrate pieces of the Lightning Network here to be able to make some payments possible via the platform through the Lightning Network, which is obviously a very popular project when it comes to Bitcoin and payment transfers. But the idea of decentralizing social media, there are a lot of projects out there that people try to use when it comes to media and decentralization, but they're still in early days. Now the question is, can Twitter play a bigger role in this space?
All right, Sonali, stay with us. I want to bring in our next guest who is joining us live from the Bitcoin 2022 conference in Miami, Pascal Gauthier, CEO and chairman of the crypto security startup Ledger. Before we dig in, Pascal, I'd love for you to give us a flavor of Bitcoin 2022 this year. Of course, it was big last year. Is it even bigger this year? And what are people talking about?
Look, this year is very intense. Last year, sadly, I couldn't come because I'm European, and so I wasn't allowed to travel to the US. But what I know from what people tell me is this year is even more intense than last year. I think, we are post-pandemic, and so, people are very happy to meet. I'm meeting with people that I've only met online so far, and right now, it's a very happy moment, and you can see that it's really going very strong with a lot of support from all communities that are going towards Bitcoin. So it's a great moment for Bitcoin.
Ledger is known for its crypto hardware wallet, and you're out with a new one. How is this new, better, improved?
Well, it's just that cryptocurrencies are evolving, and so with the evolution of the protocols and the evolution of the application that sits on top of protocols, you just need new hardware to enhance the experience. And, the Ledger NANO SPLUS is just a result of that. Like you need more space, you need more usability. And so this is what's happening. So it's a product that was long overdue. It's out now in the market. And there will be many more products coming for Ledger in the future.
There have been a lot more instances of scams and hacks in the NFT and in the DeFi space. How is Ledger attacking what's happening here? And can you keep up with the technology that hackers are using to get into new spaces?
Yes, of course. I mean, hackers are always hacking in exactly the same way. The problem is education in the space and, people understanding that they need hardware security to secure their assets. This is the fundamental truth of cryptocurrencies, NFT. I mean, anything that has a private key needs hardware security. And so people need to learn. And usually, sometimes they learn the hard way, and we're sorry for that. But when it comes to NFT, NFT is treated as a first-class citizen on all Ledger products. And right now, depending on the NFT collection, you get between 25 and 40% of all NFTs that are already secured by Ledger. So I think we're doing our job, and the communities are responding well and using our product to secure themselves.
What do you think about competition in the space also? There's news of Jack Dorsey and the block working on hardware wallets. Are you nervous about that? And how does it change the competition when it comes to the wallet space?
Well, first, I think competition is always welcome. It means that there is a space, and it means that there is something there. So, Ledger is a very strong company, and there are a few hardware wallet manufacturers in the world. But the fact that Jack Dorsey and Block are taking a take like this is good. We know them, we talk to them, and I feel that what they're doing is actually something that is Bitcoin mainly, and within the realm of what Block and Square are doing. I think that Ledger has a much more holistic approach. Like, we are a hardware wallet manufacturer. We cater for every community. We're not Bitcoin only. Of course, we're very strong on Bitcoin, but we are multi-chain. And I think the future is to hide away that complexity for users. Like, they shouldn't worry so much about the chain, but they should worry about, manufacturers like us worry about the experience in the future. So we are very focused on the journey of the user and making sure that we support every community in crypto. And I think that's where we're very different from everyone else.
Well, speaking of communities in crypto, there's a big one on Twitter. And since we mentioned Jack Dorsey, I'm curious what you think about Elon Musk joining the board of Twitter, given his thoughts on decentralization and his own sort of role in the crypto community. How does this strike you?
Where it strikes me the most is I think, I followed all of this, and I think Elon Musk is a beautiful troll, and I think he's amazing. And so I think he's taking a stance at freedom. I think, freedom is a concept here that, that Elon is standing behind, and, freedom of speech. And I think, of course, he's big. The reason why he's big on decentralization is because decentralization brings freedom to the people. And I think freedom is what really motivates him here. And actually, freedom is what Ledger is all about. Like, we want to empower people with tools so they can, reclaim their self-sovereignty, like own, what they want to own, whether it's Bitcoin, whether it's an NFT, or everything else that's going to go on blockchain in the future. So I'm very aligned with Elon Musk's move, and he roots for freedom, and so are we. So go Elon.
You don't normally hear the words beautiful and troll together. How can a troll be beautiful?
Oh, because I think he's an internet genius. Like, every time he posts something, he breaks the internet. So, but I think sometimes he's trolling. I mean, we were talking about like him being a promoter of crypto. I don't think, being a promoter of Doge is, the best that you can do for crypto, but Elon is doing it. So, I don't agree with everything that Elon Musk says, but I have to say that, he's an internet magician. So, you have to respect that.
This idea of security and some of these big names, Elon Musk, when it comes to potential crypto and Twitter, and Jack Dorsey getting deeper into crypto, at the end of the day, with crypto being down, even among one of the biggest conferences that surround Bitcoin, what are you seeing in terms of institutional interest, and what's stopping people at the end of the day really from getting in?
Well, nothing is stopping people to get in now. I think people need to understand that with crypto, we just got into like a 30 years, circle of like going up. Like there's massive adoption anywhere you look at. Whether it's cryptocurrencies, NFTs. I think the next big thing will be play to earn. And so everyone is coming in from a retail perspective, but also from an institutional perspective. You know, I've been in this game since 2014, and I can tell you that now no one is doubting the crypto or Bitcoin or blockchain technologies. Like, everyone wants in, and so you have an amazing phenomenon because it's worldwide too. Like, everyone is getting in from everywhere in the world, and this is actually very unique. This is the first time that everyone everywhere in the world is getting into the same technology rail, and so this is why you see so much momentum happening right now.
Pascal Gauthier, Ledger CEO and Chair, will let you get back to Bitcoin Miami. Thank you for taking the time, along with Bloomberg's Shonali Basak. Coming up, online events aren't over just yet, with Apple holding its Worldwide Developers Conference virtually for the third year in a row. We'll have more on that next. This is Bloomberg. Apple is back online, the iPhone maker announcing it'll hold its annual Worldwide Developers Conference virtually for the third year in a row, a sign that major tech events are still a ways off from returning to pre-pandemic norms. I want to bring in our Mark Gurman, who of course covers Apple for us. So look, Mark, Apple has been leading a push to come back to its office for its own employees. Why hold this event virtually again?
Yeah, they really had no choice but to do this virtually, right? We don't know what's going to happen with COVID over the next 2 months or so. It's not predictable. These shows take several months to put together, right? They either have to put 3 months of time into developing an in-person version or 3 months' time developing an online version. And it's really hard to put, all your effort in if you're splitting it across both. So they had to pick one direction. And the in-person direction is just not safe at this point. Who knows what could happen with COVID 1 week or the day of the event where they have to cancel the whole thing. Apple was in a position where it really couldn't afford to become stuck. So it had to go online only, and the compromise is they're going to allow a small number of people in the Steve Jobs Theater at the Apple Park headquarters to watch the pre-recorded video live.
So what are we expecting the substance of this developers conference will be? What will be the big announcements?
I think this is going to be a fairly strong Apple developer conference, right? They are scheduled to release new Macs, including a new version of the MacBook Air around the middle of the year. So perhaps they use WWDC to introduce that laptop. That's going to be a very big deal. Obviously, there's lots of fans of the MacBook Air, and this will be the biggest redesign in the product's history, and we'll have a new version of the Apple in-house chips. We're also looking for major fitness tracking and health upgrades on the Apple Watch, as well as a pretty big update to iOS, the iOS 16, though I'm not expecting a full-blown redesign. And additionally, there could be some conversation about AR and VR applications ahead of a larger reveal of its mixed reality hardware for its headset later this year or next year.
You've been reporting on Apple's return to the office and pushback from some employees. How is this evolving? I mean, and could you see Apple losing talent as a result when, other companies are also pushing for people to come back?
Yeah, so next week, that's the deadline to start returning to the office if you're an Apple corporate employee, right? So they'll start 1 day a week in the office on April 11th, right, next Monday, and then a few weeks after that, it'll be 2 days a week. And by the end of May, or a week before the end of May, they're going to expect employees in the office Mondays, Tuesdays, and Thursdays. Now, I would say there's probably at least a few hundred employees who are leaving Apple over that policy. But, we should note that Apple has over 160,000 employees. Obviously, most of that is retail, but still several tens of thousands of employees. So this is a small number of people altogether. The interesting thing to me, if anyone wants to read my Business Week story on this, is that Apple put out a 9-minute advertisement touting how great its own products, software, and services are for remote work. Yet it's requiring those very people who developed those products to work from the office. So a little bit of irony right there.
Irony indeed. Mark Gurman, as always, great to have you. Thanks. And that does it for this edition of Bloomberg Technology. We are back tomorrow. We're going to be joined by Jamie Unknown, President and CEO of eBay. And don't forget to check out our podcast. Find it anywhere you get your podcast. I'm Emily Chang in San Francisco. This is Bloomberg.